Friday. Jenny Fields here, your Martin County property appraiser. Today it should be short and sweet. I'm going to kind of cover the differences that you're going to hear when you hear about values. And that just went live, so we'll see if that is live. Anyway, anytime you're reading the newspaper or reading an article, everyone calls values different things. So I thought I would just give you a real short and sweet definition of each one when it comes to property taxes. So the first one you're going to hear often is market value, or AKA the just value. That is pretty important if you're looking to sell your property, because you need to know what your property is worth. And that's exactly what market value represents. It represents what we say that your property would be worth if you were going to go sell it on the market between a willing buyer and a willing seller. And we allow for costs of sale to get down to the true sale price. So market value just means that is what it's worth. So about a month and a half from now, we're going to be mailing out the trim notices, and we're going to have another video on that. But the trim notices are going to be coming out, and you're going to see all three values that we're going to talk about today. The first one being the market value. That's what your property is worth. The second one, and also if you're looking to buy a property, that market value is important above all other values that we're going to talk about, because that market value is what you're going to estimate when you check your taxes. When you estimate how much your taxes or what you're going to pay, you're going to use that list price or the market value that we say is on the property. So that's what your property is worth. Assessed value. This one, I don't want to basically say it doesn't really mean anything to anyone, but assessed value in the state of Florida, when you buy your property, from the moment you buy your property, whether you have homestead exemption, say you go and file for homestead exemption, it's a property tax exemption, or even if you don't file for homestead exemption, then your property is going to be capped. And what I mean by that is the year you purchase your property, in the following year, your market value, that's what your property is worth, that we say your property is worth, is basically locked in. And from that point forward, if you have homestead exemption, your market value every year after that can't go up any more than 3%, or the consumer price index, whichever comes in lower. So over time, that original market value will only incrementally go up that little tiny amount every year. We're still going to show you what your market value is worth, which is what you could sell it for, but your assessed value is what has that assessment limitation on it. Now, if you don't have homestead, and let's say you have a strip mall or a rental property, that also has a limitation from being increasing every year, but it's a 10% cap. So, and that cap doesn't apply to the school levies. So you still have a cap, but it's either a 3% homestead cap or a 10% non-homestead cap. But either way, that's the difference between your market and your assessed. Market is what it's worth. Assessed is what has been limited from increasing over time. The difference between the two is that difference in the middle is what you pay no taxes on, because it's a savings. It's your benefit or your nugget of savings. The last one is taxable. That is what you as a taxpayer is what you're going to be paying taxes from. That is so you have your market, which is what it's worth. Your assessed is what it's been limited from increasing. But then from the assessed comes off all your property tax exemptions. So if you have a homestead exemption, if you have a limited income senior exemption, all your property tax exemptions come off the assessed. That's what is the taxable. That is the bottom line number. Every taxing authority in Martin County want that bottom line number, because that's basically where the revenue comes in, is from the taxable. So you have your market, that's what it's worth. Your assessed is what your market value has been limited from increasing, and then you take off all your exemptions, and that's your taxable. So that is the three values you're going to see often. You're going to see all three on your trim notice that you're going to get in mid-August. And again, if you have any questions, please reach out. We have live chat, or you can give us a call. So thanks for tuning in. See you later.